Todd Schoenberger joins us right now, Managing Director at Land Coal Trading, once again from Baltimore. Todd, welcome back to the show.
Thanks for having me.
What did you think about Friday afternoon? I mean, are we accurate in saying, yeah, it was about our jobs report, it was about what was going on in Hungary, but it was also about just the general fear of what could happen around the globe over a 48-hour period?
Absolutely, and you could take your pick on this one. I mean, when you look at the jobs report, how poor that was, then you look at the geopolitical concerns. Let's not forget about the Gulf oil disaster. There are a lot of things out there right now, and it's all spelling bad news for investors and for traders. So to have that type of a sell-off going into the weekend is one thing, but I'm not too surprised right now with the market reaction today. I'm expecting we're going to have an update by the end of the day today.
But why? I mean, because it seems to me that nothing that's happening is instilling confidence. As you said, take your pick. No confidence in traders, in consumers, in anybody in this point, in what the Obama administration is doing.
Yeah, well, there's a couple of things here. When you look at on Mondays, the first trading day of the week, if you go back the last 5 years, the markets have actually gone up 80% of the time on the first trading day of the week. So I'm going with statistics. I'm going to throw all that negativity out there and say, you know what, we're going to go up today because of that. Plus, there was only one economic report today. We have zero tomorrow. The real headline story will be this Friday. But ultimately, though, regardless of what happens over the next 4 hours, overall, the sentiment on Wall Street is very poor, very negative. We're looking at Washington. We don't see anything that's happening there that's actually going to turn things around. We don't see job creation that's really happening in this country. So ultimately, yeah, you're going to have that negative feeling going on. And I'm one of these pessimists that's out there. I can't be optimistic with this market right now. And I think Friday's sell-off is probably just the beginning of a massive sell-off that's going to take place over the next few weeks.
So that kind of answers my question. My question was, are you one of those who is going to buy when fear and misery and all the other index we look at is at its worst? Or are you one of those that's going to wait until that turns a little bit?
Got to wait and see when it turns. I mean, you want to follow trends, and right now the trend is going down. Yeah, when you start thinking about what's happening with the markets, with the world as a whole, I mean, Americans are not feeling too good these days. I mean, we have an unemployment rate that, I mean, the president gets out and he throws out this number of over 400,000, but we all know what the real number is. We're looking at private sector employment. It's just not there. So when you see that, you start thinking about the prospect of higher taxes in this country, limited services. We have some municipalities that are declaring bankruptcy. I mean, it's just getting worse and worse by the day right now. What we really need is some true leadership that's out there, somebody that's going to get out there and say it and get emotional and really get and say we're going to get back to work and get everybody rising again like we saw during the Ronald Reagan days.
So, then you're hoping, like all of us, I guess, for a big turnout at the polls tomorrow, especially tomorrow's primaries could be a big tell as to what we're going to see again in the fall. You think the administration's going to be listening, though?
I hope they're listening. I'm not so sure what they're listening to, though. I mean, when you start looking at some of the reports that are out there from this president, I was I thought it was suspicious actually on Thursday when he came out during his speech in Pittsburgh and he said we're anticipating a huge number. Right. I would think that if I'm the CEO of an organization, I would be privy to a lot of these numbers before they're published to the world. And he evidently is not. So then Friday morning we have the poor reading that comes out, and he's trying to, to spin it a little bit. And talk about spinning. We could talk about this BP oil disaster right now. The fact that the president's coming out and he's actually trying to say that BP should not be paying its dividend. What he's trying to do now is spin it again and make he's trying to paint the picture of these so-called rich guys that own BP stock and are going to get $10 billion, which is that's the annual sum. It's not the quarterly dividend that's being paid on the 20th. So he's throwing out this picture of all these bad rich people that are running BP, and they're the reason for the Gulf oil spill. He's spinning this right now, and nobody's quite picking up on it.
Yeah, Todd, I think people the average investor is probably leery of dipping into BP, but what about some of these others? I mean, clearly Exxon and Chevron and some of the big integrated names, they're going to survive all this and they'll be fine. Do you think they're attractive right now, or are they still caught up in all this to where you want to stay away from them?
Okay, if you look at when the BP oil disaster started on April 20th and you look to current time or going into the market today, the top 6 oil companies have lost a combined $150 billion in market cap. So when you look at that, clearly the sector is down. It's just getting blown up left and right. But overall, long-term, crude oil is as important to humans as oxygen. You need it for everything. Crude doesn't just make energy products. It also makes plastic, carpets, fertilizers, things that the world needs to survive. So when you look at that product alone, and I start thinking of demand, not just here in the U.S., but overall, yes, I look at those big 3 companies, ExxonMobil, ConocoPhillips, and Chevron. I love those companies. And plus, Exxon, of all companies, knows that it has a fiduciary responsibility to its shareholders. I mean, the company has bought back tens of billions of dollars of its own stock. It's paid out tens of millions of dividends over the years. It's a great company, and investors probably have some portion of it in a mutual fund or a 401k or whatever if they're not owning it directly. But that's a great company to look at.
Oh, largest market cap out there. I'm sure you're right. Everybody in some shape or form has it in their portfolio. Let's talk about the cash in your portfolio, though, quickly. How much, if any, should I be holding at this point? More than you've been in a while? Less?
More, minimum 30% right now. You should be holding on to your cash. Cash is king. You should, when you go out and spend, use a debit card or pay with cash. Never use credit. Look, you have to consume and hold on to your cash because there is so much uncertainty that's going on in the world right now. We're literally, this economic recovery is on toothpicks. So when you're going forward, you need to hold on to that cash. And maybe when things do turn around, Chris, as you mentioned, having some type of a signal that things are improving, that would be the time to start taking some of that cash and putting it back into equities. But 30% minimum in your portfolio has got to be in cash right now.
Todd, I was noticing earlier this year when we had you on, you liked the S&P up 5%. At the time, that's by the end of the year. At the time, that seemed like very conservative. Now I think a lot of people would take that 5% by the end of the year. If you still believe that, then you believe that from this point we're going to be up more like 7 or 8%. So you still see us going up by the end of the year.
I do. I actually see a little bit of a turnaround going into the fall months, and I'm still sticking with that 5% for the year. You know, when I came out with that projection, when I figured 5%, everybody looked at me and started yawning because they thought it was so boring, and the markets actually shot up at the beginning of the year. But overall, though, we should expect more volatility throughout the year. It's going to be a tug-of-war match between the bulls and the bears. You will continue to see that this year, but ultimately, though, you will start seeing some type of spending occurring, but it's probably going to be from corporations, not so much the American consumer. But in the later part of the third quarter going into the fourth quarter, that's when the markets will have some type of a Santa Claus rally. We should be in decent shape there, but we'll finish out the year at a very benign 5% gain. So I'll take it, though.
Yeah, I think right now a lot of people would. That 5%, with all the volatility we're going to have to sweat through, to get there is going to be difficult, though. Todd, thanks a lot. We appreciate it.
Todd, we'll take you anytime, Todd. We picked your brain today.
Tracy.
Thanks for playing.
We did. We worked with him.
Yeah, we were giving you a workout there. Todd Schoenberger, Managing Director at Land Colt Trading in Baltimore. Todd's been a big fan of the hotel stocks, too, all along.
And those big energy